Gracias, Daniel.
Thank you, Daniel. And congratulations to you, to the panelists, and to Andres for this very interesting discussion, which I would say ties in with the discussion that's coming up now regarding payment mechanisms and PPP contracts. Actually, all around the world, including here in Latin America, something we often see is the use by governments of financial instruments to support the commercial viability of projects through direct transfers during construction, during operation, or availability payments, and risk support is also another consideration. Actually, it's quite common for the governments to have quite an active participation in the contracts. But this sometimes takes place without a proper understanding of the consequences of the intervention. And sometimes this exceeds the scope of what would be a clear decision as to what instruments should be involved. So that's basically the gist of the discussion we're going to have with regard to especially important PPP experiences in the region. So we'll have Maria Sandoval, who will bring the Colombian experience regarding FDN in Colombia and how they deal with these instruments in terms of structuring projects. We'll have the Salvadorian experience through Shafiq with successful projects to talk about, and a subnational level experience from Brazil, and an especially relevant perspective as to how subnational entities, mindful of consequences and affordability considerations, how they may also deal with the use of public payments. But we have also invited Aldo from the University of Chile, that was responsible for preparing the original paper, so as to provide an overview for Latin America. So Aldo Gonzalez, can we give you the floor? Thank you, Marcos. Hello, everyone. Hope you're all well. I'm very pleased to share this meeting with you. As you said, I've been asked, and by the way, I'm going to use my presentation. I've introduced a few changes, if that's okay. Hope you can see me now, right? Great. This work we did with Alejandro Mico, a colleague at the economics department of Chile University. The idea was to look at mechanisms and instruments that the government may make available in order to enhance the viability and financing on the part of privates for PPPs. Here's a summary of the relevance of PPPs and the issue of financing. This is something that's probably familiar to all of you. Private contributions to PPPs, not only in financing, but also in operating infrastructure. These are long-term projects with contracts from 20 to 40 years duration with a high initial investment that has to be recovered over the course of the life of the contract. The contributors of private funds are different kinds. You have institutional investors that are subject to different prudential regulations, essentially related to risk. You have pension funds, banks, insurers, and there's also pure private investors who are seeking good investment opportunities and profit margins, and we want to bring them on board as well. But the idea of attracting private financing is not a goal in itself, the ultimate goal being to ensure effective offers of infrastructure at a reasonable cost to users, the community, and obviously to the government. In order to consider the issue, we adopted this methodological approach, which separates or segregates functions according to the individual instrument. So there's funding as opposed to financing. This is useful to put some order into it and identify the objectives and instruments that we're going to use. So funding shows how infrastructure will be paid for regardless of who contributes the capital. And this is done through fiscal transfers, direct payments by the government, payments by users. This may be tolls in the case of roads, and also airport fees. And there's also commercial revenue, could be in the case of land around the infrastructure project, or for instance, when you have shopping malls at airports. So the sum of these three components should be able to pay for the investment required by the PPP. I simplified by including a reference to investment, but of course we need to consider costs as well. And moving on to financing, the investment is covered through a mix of debt and capital. The debt is usually bank loans, bondholders, and the capital is usually from the concessionaire, providing resources in addition to private investors who may be seeking a little more profit. And here we reach the balance point, the break-even point. The equity should fund the investment, but in the longer term, the investment should be covered through the government payment, the tariff revenue, tolls or fees, plus the commercial income. A competitive tender ensures that the transfers reflect the investment demands, and the tolls may be linked to fixed fiscal transfers. The equation on the right-hand side is adjusted in a competitive bidding. And here there is a crucial aspect that sometimes creates confusion. The role of fiscal transfers is to ensure fiscal and financial balance for the project, so that a private may be willing to become involved and receive payment. The role of the transfer doesn't mean that the state, the government, will have to step in as a provider of debt or equity, because if that were to be done, it would mean that the government expects to recover that. The fiscal transfer or subsidy for a project doesn't really have that purpose. It's really about, you know, the idea of remunerating, of paying. So debt is the first element to be paid out of the income, and capital is paid once the debt commitments have been honored, the residual claimant of all revenue from the PPP. We want to ensure that we can crowd in private funds at reasonable costs. We don't want to pay overprices. The idea is to avoid excessive charges. If you look at PPPs around the world and in Latin America, there's quite a high degree of leverage, sometimes 70 or even 75%. Why so much debt compared to other sectors in the economy or unregulated sectors? The thing is that these PPPs include bankruptcy coverage, insolvency coverage, since these are often essential services and even monopolies. The idea is to guard against insolvency so as to attract more debt and bring down the cost of the average funding value. This happens in many regulated sectors, not just in that of infrastructure. The funding components have an impact on the financing because payments by the state, income from fees, and commercial income has to take place over the course of 20 to 30 years, and that is subject to risk. And the magnitude and time of this may not be as originally anticipated when the concessionaire looked at the partnership project. So we need to look at each of the risks attached to these components and see how we can manage this. And we're talking not only about sovereign risk, but also about situations where payments may depend on the availability of infrastructure of a certain quality, and perhaps the government may consider that the quality standards are not being met and may decide not to pay the originally anticipated amount. Income from tolls in fixed-term contracts are clearly variable and carry risk and depend on many macro and microeconomic factors. Finally, additional commercial income are also subject to viability. Look at what's happening at airports now. All of the income from restaurants, shops, parking lots, and so on has all plummeted due to the pandemic. So there's a risk attached to long-term contracts, which has an impact on the costs. So risk analysis here becomes important. There's extensive literature that seeks to classify risks to which PPPs are subject, including political and sovereign risk, regulatory risk, macroeconomic risk. Often air passenger traffic may depend a lot on the GDP or global economic cycles, the risks of surcharges, environmental risks as well, whether it be natural disasters or mitigation measures required by the authorities due to pressure exercised by citizens. And this also has an impact. And of late, there's been a lot of focus on the social risks that have to do with acceptance by citizens. For example, the case of urban roads in Chile. You will see many cars that don't have a license plate nowadays. And you will see that they take the license plates away so that the authorities can't read the numbers. So there's a risk in infrastructure as well in that regard. So the question is, where should we focus the action of government with regard to these risks? What are the instruments that can be used for this? The general idea is that the government should avoid or mitigate risks that do not depend on the concessionaire, and also where there is no private offering. For example, there are exchange rates, insurance policies. You can now take out insurance to cover that, also earthquake insurance and insurance to guard against other natural disasters. But there is also a risk related to recession or drops in demand, and there might not be a substantial offer on the part of private instruments, and there the state has a substantial role to play. This is a list of different instruments found mainly in Latin America, but not only, in order to facilitate these partnerships. The first instrument is transfers. This doesn't serve the role of crowding in funds specifically. There's also insurance that may be offered by government, such as the one for exchange rate fluctuations or natural disasters. Also, income guarantees. This is a very popular instrument that seeks to cover against demand risks, especially in long-term contracts and new projects that don't have a prior history. It's different when there is a concession that has run out and a new concession is going to start. You already have experience, you know about traffic, you have past measurements, so you may not need an income guarantee there. Often, we see this in some countries like Colombia and Chile. You have to see whether this kind of guarantee is required or not, according to the situation. You also have flexible contracts, the typical lower NPV of cash flows model. And so if income drops, the contract is extended until you meet an income goal, which is set for the benefit of the concessionaire at the outset. 3 or 4 minutes to go, Aldo, please. And contributions related to overruns. And why would the state put up funds as a debt or capital provider? Is there some kind of market failure that leads the state to provide this rather than the private partner? Is there an issue with availability of debt? Is it the cost of private debt? It is interesting to compare these scenarios where the state puts up debt as opposed to income guarantees. What is the benefit of debt as opposed to the income guarantees? Could transfers be more transparent? And in the case of equity, another point is, why would the state want to participate in the project's equity? This requires gathering information. There are aspects that can't be controlled through the regulatory side of things, through the contract. And a conflict of interest arises there because the state regulates, but it's also an owner. Here we have instruments available per country. I will skip this as other panelists will refer to this. We have a variety of instruments in 4 countries we looked at. Some criteria for evaluating the instruments. The key standard is the fiscal impact in terms of the links between the government and concessionaire. There are dynamic consistency issues such as short-term bias. When you have current announcements that commit future disbursements. My government term runs out soon and I have bound 5 more administrations to go. There's the issue of fiscal accounts being more short-term oriented. So the way things are evaluated focus on the short term. There is considerable opacity in relation to contingent payments. Probable payments are not as visible, but they may be triggered, and that is a commitment for the state. The important thing is to identify right at the outset all of the payments, including future contingent payments, identify also the maximum exposure to risk, the maximum risk exposure, considering what may happen if all guarantees are triggered at the same time, as this may have a negative impact on fiscal accounts. In normal circumstances, there might be a full match, but it may not be the case. Finally, we should set some kind of cap on the guarantee premiums, and ex ante calculation may be complex, but we may have some actuarial approach to this, and this is a cost that must be reflected as well. There are other criteria related to sustainability and to ensuring support for the project throughout all stages. Mutual funds and investment funds lend money, but fiscal transfers and income guarantees would not normally be expected to be recovered, as they serve a different purpose. Finally, we should look at the vulnerability vis-a-vis the political cycles. So instruments should not be dependent on the individual governments in office. Rather, we should have a long-term policy horizon, which can be achieved through institutions that work at arm's length vis-a-vis the executive and that have a clearly established function and board, and that can operate with a considerable degree of autonomy as regards the president and those in office. The example of the Fonadin in Mexico, an attempt was made in Chile with the infrastructure fund, but finally another avenue was taken. So the main takeaways and conclusions have to do with distinguishing the roles of each instrument. Fiscal transfers have different goals to those of guarantees or others. The state should define what risks it wishes to cover, and this means defining what risks depend on action by the government. Not all actions by the state are opportunistic, but sometimes settings change and governments have to change the decisions. Changes in transport policy or carbon related considerations, the role of the state as a provider of debt or capital, how can we do this? And finally, ensuring that you have good fiscal accounting of the instruments that the state is using. So that would be it. Thank you very much. Thank you very much, Aldo, for your contribution. Actually, it is interesting to see one of the key points considering the future of PPPs in the region, which is who's going to pay for the infrastructure. To what extent does it make sense to reduce the costs to users through public payments? And even more importantly, perhaps, what kinds of public payments make sense and when and in what way? In my opinion, that very much reflects the core of what's going to happen in the region in the coming years, also considering the conditions and challenges posed by COVID, the issue of affordability, both to users and to governments. It's a very important discussion. This is why we have such a highly strategic panel today, people who deal with this question as to how to pay for infrastructure on a day-to-day basis.
I would first like to ask Maria Fernanda, I don't know if your video, your camera's on. Maria Patricia, hi, yes, I'm right here. Well, let me just ask the following. Well, Colombia has some of the most advanced processes in the region. When you are involved in the implementation of projects, what kind of financial support mechanisms do you consider as alternatives in order to ensure the viability, the business viability of these initiatives. Thank you, Marco, and special greetings to you and to all of the staff of the IDB and our colleagues here. So, as you indicated, we have the Infrastructure Development Bank in Colombia. We're specialized in that sector, and the structuring of projects is constantly grappling with this question, how to pay for infrastructure. This is a daily issue. So the payment mechanisms are really the heart and soul of a sound project structure. Those payment mechanisms essentially are three categories. We have the payment by users, we have those by trade, and also public, those public sector contributions. So let's focus on these three areas in terms of public payments. Colombia has had, and I know Aldo said it in his study, it's evolved in its linking private capital, and we've gone through several models. First, we had the minimum guaranteed income that has now evolved into the payment by availability. So, in terms of projects that don't have the source of payment by users, but they're projects, just as, for example, hospitals and schools that are 100% funded by public sector contributions. So, these considerations are very important with regards to the feasibility and the sustainability concerns. So we need to know exactly what should be the amounts of these future funds, and what are the thresholds? What are the maximum discount for future expenditures? And also, how can we ensure, how can we guarantee that those futures are a commitment of payment that is firm and that will attract meaningful private sector investments? These are the most important considerations, and it should not be in detriment to the other fiscal considerations. We don't want to jeopardize the use of this instrument. We don't want to jeopardize fiscal discipline. For example, the credit rating of our country. I think these are some of the key challenges that we face in terms of public payments. These mechanisms are the heart and soul of a sound structuring process for projects. That's why many public sector entities in Colombia are now working with the FAN in order to receive that advice. Well, I think you're right. Success, the success or the demise of a project really depends on that. And I think this leads me to a question for Ramiro. In Brazil, the public sector support instruments are fairly well regulated by law, and they're varied. Could you just discuss how does Santa Catarina consider these payments? What kind of instruments exist currently, and what's the selection process for these instruments? What are the criteria in the selection process?
Bom dia.
Yes, Marcos.
Dependendo de onde nós outros estemos, lo siento, pero hablarei em português, prestigiar o Brasil e meu idioma nativo.
I'm going to speak in Portuguese, which is my native language. In Brazil, we have a legislation dating back to a few years about the funding of projects. And I'm going to talk about the reality in Santa Catarina, which is a state in the federation. We have the federal government, the union, the central government. We have the federal government or administration, and we have 27 states and municipalities. So we have 3 levels of government.
Se puede extender quien prefiero escuchar en español. Disculpe, Ramiro, contigo.
Certo. Então, nós temos aqui
tantos aportes. We have funding for the project CAPEX. But a very frequent situation here in Santa Catarina and in Brazil at large has to do with the Aldo said about risks. So the risk matrix embedded in PPP contracts and concessions in general mitigate risks and allocate the risks to the partner with the best capacity to absorb them. I'm going to give you an example of that, and that will impact indirectly the funding of the project. I'm going to give you an example of a situation we experienced here in a convention center, a multi-purpose arena we have here. When we do the financial estimates or projection of these equipment, we have a recurrent cost, a recurrent fixed cost, which is territorial urban territorial tax, IPTU. And this tax is at local level, is a local tax. But the equipment belongs to the state. So the local authorities have to convey the right value so that you can estimate that or forecast that in the project. But many a time, this information is not correct, and you run the risk of an increase in this urban tax. In the risk matrix, which is a tax risk, or as Aldo said, risk of operating surcosts or increased costs. For instance, if you estimate, if you forecast that there's going to be an increase in this local tax, this tax is going to be absorbed by the granting power, by the state public sector. And if the urban tax goes down, there might be a case that the tax is going to be reduced. So the granting power or the grantor can ask for a rebalancing of its estimates. So in the risk matrix analysis, you're able to mitigate the financial impact of the project. This is very frequent here. I don't know if I can talk about other possibilities of agreements and consortiums next.
En verdad, su comentario ahí llama la atención para lo que creo, la conexión entre lo que tú acabas de hablar y María Patricia, ¿verdad? Que es la manera como diseñamos, cómo pagar la infraestructura, además del sentido más general financiero económico, pero tiene consecuencias importantes para la ingeniería interna de los incentivos del contrato. O sea, no es tan sencillo como preguntar quién paga, pero de qué manera se paga, sea por pagos durante la construcción, durante la operación, sea por medio de riesgos, pagos contingentes. Cada uno tiene consecuencias muy importantes dentro de los mecanismos contractuales de largo plazo, y creo que ahí está la tecnología de la experiencia que tiene. Pero vuelvo a ti con esta reflexión en un rato. Pero ahora quería llamar a Shafiq, el líder del programa de APP de El Salvador, para decirle, bueno, el programa de APP en El Salvador es más reciente que los dos que acabamos de presentar, pero aún, ¿qué tipo de instrumento? Y quizás por esto mismo tenga más claridad sobre los instrumentos de apoyo público. Entonces, la pregunta pragmática a ti, Shafiq, es ¿qué tipo de instrumentos de apoyo financiero El Salvador tiene a su disposición y cómo he utilizado estos instrumentos hasta el momento?
Gracias, Marco. Buenos días a todos los panelistas.
Thank you, Marco. And I'd like to thank all of the panelists and all of the guests who are attending this event. I think it really depends, Marco, on the project and the sector in which we are structuring the project and the potential investor profile, those that might be potentially interested in this initiative. So a large part of our effort in our PPP office is to provide an excellent prior simulation, and because we get a much clearer and more in-depth overview. And then we can begin to see the potential instruments. We already know those ordinary ones like contingencies, evaluations, and the upfront payment you were talking about in the development of each one of the phases. This is usually done when you're sure about the next phase that's about to be implemented. These are factors. For example, adjudication factors is another consideration upfront. And then once you've gotten into the construction phase, and now you begin to look at the potential adjudication considerations as well. And at the moment, there, at a certain point in time in the contract, in other words, when 2/3 of the contract stipulations have been fulfilled, or before we get to the 2/3 of the life cycle of the contract, that's where we look at the most common instruments that are available. Also looking at the insurance. We are, for example, right now dividing the first 3 projects, looking at partial credit, and not only the PPP systems, but other contract structures that are aligned with project finance in order to address and improve and reduce the transaction costs, making it more bankable, and at the same time address the risk categories of the project. Because of the high indebtedness in El Salvador, these are highly attractive for our potential stakeholders, and also the premium, and we've put on the table from a very firm perspective, we've been able to show an inclination that greatly favors maintaining the interests in these transactions, at least in the case of El Salvador, that exceed 90 and $100 million, which for a country like El Salvador is on an enormous scale. This is the first series of projects that involve this level of complexity that we're involved with. So looking at these tools that are used in order to maintain and this is in particular for self-sustainable projects that are co-funded, we try to not necessarily do an enhancement of its bankability based on future fiscal availability, but instead, if the adjudication process, you have, for example, a contingency activated the contract, and in the bidding, as a concessionaire, you are able to pay less canon instead of introducing this cost overlay or the situation that was unforeseen, where your financial balance or economic balance was suddenly imbalanced or out of whack. So this way we can address the and let them rest assured, our equity holders, that their investment will be sound. We're a dollarized economy together with Panama in the region, and the third country is Ecuador. So we try to maintain this as a launching pad for these kinds of investments. Well, listening to the other colleagues and yourself, I get the feeling that the key issue here is that, okay, you have a whole menu of alternatives. You can select various instruments. So I think the rationale for each country to select specific instruments, and you mentioned there that it has to do with the DNA of each project. Could you discuss in more detail the criteria that would be used in selecting these mechanisms or the instruments? Maybe you could just shed some light with specific examples. Well, for example, our first road construction process, which is about 46 kilometers in length. It's Highway 5, and this is a road that goes from our border with Guatemala all the way down to a bypass going to one of our key ports. And this is a cap of about $86 million with that included. And for example, when we were structuring this, we realized that one of the key points was where were we going to put the toll booths, making sure that we would have least adverse social impacts. But to do that, we'd have to generate future fiscal payments in order for this project to be viable. Not only did we have to do that fixed payment, but we also had to have upfront payment structure so that we could ensure the two phases of the project going forward, lasting 30 years. In year one, the government would put up about 50% of the CapEx. And then in the year 14, they would also put up about 50%. And during the development process, they would also have to make some fixed payments. So obviously, this is closely pegged to the bankability of the project based on the bank products that the bank, local banks and international banks can put up. So here, again, we look at partial credit so that this can have a greater we can enhance and improve the risk quality that will also enhance the repayment of the debt. So, for example, we had to structure this in midterm. This is the first time that being done in Central America with these kinds of conditions, but they are closely tied to the structuring and availability of fiscal and future payments. All right, that's a great insight. So depending on the transfer mechanisms, we have a diverse sequencing in bankability, but there are also varied consequences in terms of the interests of other stakeholders like the banks and the government. And I think this leads to the next question. Depending on the kinds of instruments, the fiscal consequences will vary, not only over time in the short term compared to long term, but that introduction, I think, creates an enormous complexity with enormous fiscal consequences. Could you just tell us what was done in Colombia in this regard and the best way of implementing this? Yes, of course. I'm going to talk about the fiscal consequences related to the direct transfers as well as the fiscal consequences of the risks assumed by the state. So the fiscal consequences of those direct transfers, they have very, very significant implications because these are resources committed throughout the entire duration of the project. If it's a 30-year project, then the commitment is going to have to be for the same time period. So in the legislation in Colombia, it's stipulated that these transfers are not debt, not considered debt by the Colombian government, which means that Colombia maintains its credit rating, its the quality of its credit rating without affecting it or being affected in terms of debt because of these transfers. But Colombia has fiscal policies in its institutions in order to ensure that the first thing that's budgeted when the general government budget is formulated, the credit rating agencies will assign a level similar to government bond issuance. So credit rating, in this case, would see it as a debt. And it's important that you have a boundary or a limit as a percentage of Colombia's GDP. It's a very small value in terms of expenditure capabilities. So we're very cautious to make sure that we don't exceed that threshold, that it's small enough so that we're not going to commit future transfers, because if it's not debt, if it's poorly used, this instrument, then it could lead to very serious consequences. Now, in the case of risks, Colombia, and correct me if I'm wrong, I don't think I am, has the most complex system in terms of evaluating contingent liabilities. I think speaking in a positive way, because we've also learned from some very challenging experiences in the past. So it's complex because in project structuring, we have to see those risks assumed by the state, and when the probability and the impact of these risks is fairly significant, then the project, in addition to the project costs, needs to contribute to a contingency fund. That contingency fund that is managed by the Ministry of Finance and Public Credit is one additional contribution made by the government to the project. And that's where you have resources available. So in case a risk would arise, you have the resources by the government in order to respond to the risks, because the projects usually are many more, they turn up, actually, the expenses usually exceed the capex that was envisioned. So we learned, actually, it was a very painful experience in the past, that if you don't have contingency funds, you can have some very serious and very severe consequences. Thank you, Maria. So I think the message is clear. You have different government project financial support mechanisms. And when there are also many different consequences in terms of bankability, looking at the bank's perspectives. But there's another consequence, and let me just take this opportunity to looking at, well, getting back to Ramiro, looking at your experience, when we talk about affordability and capacity to pay for these commitments. And I think this is particularly problematic for a national initiative. So in Brazil, those that are involved, those agencies that are involved with the PPPs and are contracting this, and I know that, is there support nationally for this in Brazil?
Yes, I'm going to speak slower so that Natalia and the other interpreters can translate. In two situations. First, and I'd like to go back to the mitigation of fiscal risks and the government's affordability. Something we have been doing here in Santa Catarina, and that's a priority for the state government, is to generate new revenue so that you can contribute to PPP projects. That is to say, I cannot use existing revenue. So I have to generate new revenue in order to take part in PPPs. So concessions that generate payment from the private sector to the government, which is known as outorga in Brazil, and the sales of real estate properties, when the state sells property land that's going to generate new revenue that was not allocated to any item in the budget. This will feed the PPP program at state level. So I generate new revenue by selling property, by selling land, and this revenue is going to be used for public payments in PPP projects. This is what we have been doing in order to balance fiscal accounts. I cannot use already allocated revenue. Another situation, and then Marcos mentioned the support of the federal government or central government. We have agreements during the World Soccer Cup in order to build soccer stadiums, underground transportation systems. When the World Cup took part in Brazil in 2014, that was a very common practice. So we have an agreement between the federal administration and the states or municipalities, and you have funding from the federal government being transferred to other levels of government, and that's used for payment. We have an example here of a PPP to construct, build, and maintain social educational center, where they house minors that have committed misdemeanors or have legal problems. So there is a transfer of funds from the federal government to the state government of Santa Catarina, and this money is going to be used to structure the project, to hire consultants, to do the modeling of the project, to build this new unit, to house minors, and to acquire equipment for this new housing center. So this is very useful in Brazil because that reduces the need for warranties or collaterals, because you have a resource that's going to be paid upfront in the project, and that decreases the need for warranties or collaterals. So this is the two things we use. We generate new revenues, and we have agreements with the federal government. These are the possibilities we have been using.
In Colombia, you have similar mechanisms, don't you, in terms of providing that kind of support? Yes, currently, the greatest challenge that we have has to do with those co-financed projects in the area of, for example, public transportation. We're also implementing others for the construction of schools. And the fact is, it truly is a challenge because the projects are mainly in urban areas, and most of the resources are at the national government level. So these co-financed operations are probably the main challenge that we're faced with currently, and we haven't found a model of the various management agencies. And we have a third alternative that brings together the national level resources and the local resources. And this is, again, a third alternative involving the state, that eventually the state will be the one involved in making these concessions. So in these co-finance initiatives, we have some interesting experiences, and I'll be very pleased to share this with you.
Great. That kind of issue we see a lot in Brazil. Nowadays, there are public consortia, different public entities gather for a PPP contract. For example, water and sanitation projects, where you have several municipalities with a single procuring entity. But there are also institutional issues that have to do with the actual payments, because perhaps the third entity does not have revenue raising capacity, no tax raising or collection capacity. So that may also have a lot to do with the upcoming regional public good consideration. A little question. The questions in the chat, should we answer those in writing? Because I think our time is running out. Yes, we're running a little over. Thank you all for the questions. We will try to process them and answer them. I think after listening to all of you, my feeling is that the way you pay for infrastructure has major consequences beyond the typical economic question. As you pointed out, the bankability of a project, the fiscal impact, the affordability will be affected by the way the payments are made. And there's another dimension related to performance incentives. And I dare say this will also be central as part of the structure and discussions. The way you establish the payment mechanism, the heart and soul of structuring, and it makes a difference between the success or failure of PPPs. And this will become all the more important in the future when it comes to infrastructure programs in the region. So, Shafiq, Mapa, Ramiro, Aldo, thank you very much for having engaged in this very useful discussion, which we hope will keep active so as to contribute to the success of future PPP programs. Thank you all.